Welcome to this explainer. Okay, I want you to picture this. You're walking into the headquarters of one of the biggest banks in the world. You step through those pristine glass doors, totally expecting business as usual. But instead, you find the police are already inside. And honestly, here's the craziest part. They aren't there to investigate some traditional old-school vault heist. No, they're there because the bank itself just realized it's sitting on a massive, highly volatile ticking time bomb. And it was built right under their noses.
All right, let's dive right into this. $1 billion. That is the exact size of this time bomb. Back in the year 2026, the Commonwealth Bank of Australia, you'll often hear it called CBA, found itself facing a public embarrassment of just truly historic proportions. Somehow, $1 billion in fraudulent home loans had managed to slip right through their fingers, and in doing so, it exposed a massive, gaping vulnerability in the very foundation of how they do everyday business.
Now, you might be wondering how they pulled this off. Well, we are not talking about some incredibly sophisticated Hollywood-style Ocean's 11 operation here. This is a completely new breed of digital crime. The perpetrators didn't need specialized high-tech gear. They didn't need a highly trained team of inside men infiltrating the bank's mainframes. Instead, they relied on something so much more accessible, a free AI accomplice. These criminal networks successfully leveraged everyday, publicly available artificial intelligence tools to completely trick the system and walk away with an absolute fortune.
Think about how this used to work. The entire landscape of financial fraud has just completely shifted. Back in the day, if you wanted to defraud a bank for a major mortgage, you needed highly sophisticated, incredibly expensive professional forgery equipment. You needed real, hard-earned expertise. But today, in this new era of generative AI, where users can execute these incredibly complex tasks just by typing out natural language prompts, something folks are calling vibe coding, that barrier to entry has completely collapsed. I mean, the tools are totally free. There's literally zero barrier for criminals to get started. Pulling off fraud is now essentially as easy as sending an email.
So, what exactly are these networks cooking up with these free tools? Well, they've been generating perfectly plausible fake bank statements, entire AI-generated income reports, and just flawless synthetic pay slips. And the absolutely crucial point here is that these aren't just, good enough fakes that might pass a quick glance from a tired human. Actually, scratch that. They're way beyond that. Because they are meticulously crafted algorithmic outputs, they're native digital creations designed specifically to bypass the traditional red flags and legacy security systems that banks have relied on for literally decades.
Which naturally brings up a pretty glaring question, right? How on earth could a trillion-dollar entity like the Commonwealth Bank miss $1 billion in pure fraud? Well, to understand this, we have to look at what analysts call the monopolistic blind spot. See, when an institution becomes so massively huge that it commands the lion's share of an entire industry, a really jarring disconnect begins to form. Entirely new vulnerabilities just open up right under their noses, all because the fundamental way they operate changes at its core.
And that blind spot is just jarringly evident when you look at the Australian banking system. Just 4 massive players completely dominate the industry. They hold a staggering 75% of the entire market. All the other banks combined, they only make up the remaining 25%. What this ultimately means is that there's virtually no real fierce competition at the top. And, when there's no fear of your customers leaving for a better competitor, the internal culture of a bank shifts in very predictable and honestly very dangerous ways.
Because these top banks lack that cutthroat competitive pressure, they've all essentially converged on the exact same strategy, becoming massive, highly efficient mortgage factories. A massive 70% of their entire existence is now strictly dedicated to financing mortgages. Their goal is just lending out as much money as possible to buy homes. But this creates a super high-pressure environment where sheer volume and speed are heavily prioritized over deep, meticulous due diligence. They take on more risks just to process more volume, which is exactly the opening these scammers exploited.
Okay, but here is the third and honestly the most vital piece to this puzzle: the bank's own technology. To handle that overwhelming nonstop volume of mortgage applications, banks have developed this fatal over-reliance on AI to manage what they consider tedious verification tasks. Upper management and CEOs consistently push their workers to use large language models to save time and process more loans faster. But, as we're about to explore, this supposedly advanced technology is, in reality, kind of an idiot savant.
See, as the research clearly points out, these AI models have no real model of the world and zero understanding of truth. They are absolutely brilliant at mimicking human language and behavior, which makes them seem super intelligent, right? But they are completely hollow underneath. So when a bank uses an AI agent to triage or verify crucial financial documents, that agent is essentially clueless about what's genuinely real and what's synthetically fake. It's just blindly looking for patterns it recognizes.
The source material lays out exactly how all these totally disparate elements combine into a perfect storm of corporate complacency and technological overconfidence. It goes like this. Step 1. Criminals use those free zero-barrier tools to generate perfect AI fakes. Step 2. The bank, acting as this monopolistic mortgage factory, prioritizes speed over diligence to keep their processing volume high. And Step 3. The bank's own AI verification agents are easily fooled by prompt injections and these well-crafted synthetic documents. It is quite literally a case of machine techs outsmarting a bank machine.
And this leads us to a number that is just staggering. 96%. We are rushing at breakneck speed to automate the absolute most critical parts of our financial lives using systems that currently fail at professional tasks 96% of the time. I mean, think about that for a second. We're talking about machines that sometimes can't even play a standard game of chess without trying to make illegal moves on the board, yet they are being blindly trusted to approve the most important financial documents in the country. It's wild.
So let's zoom out here one final time to the macro level. Because this isn't just some simple story of bank shareholders losing a bit of money, or a minor little hiccup in the digital revolution. No, this represents a systemic economic threat. If $1 billion in home loans can be seamlessly approved based entirely on fabricated digital data, analysts are warning that we have absolutely no idea how many of those households are actually capable of paying that money back into the system. The entire foundation of those loans becomes a complete unknown.
And regulators like the Reserve Bank of Australia have been repeatedly warning about exactly this scenario. They argue that these heavily leveraged banks are risking absolute catastrophe by putting the cart way before the horse. As this quote perfectly captures, we're witnessing the logical foundation of banking being replaced by a vibe-based system. It's a system that prioritizes shareholder smiles and lightning-fast approvals over the actual rigorous brainpower required to run a safe, modern economy. Until we realize that human oversight is still absolutely vital, these magic box solutions are going to remain a tremendous risk.
Which leaves us with one incredibly uncomfortable cautionary takeaway to wrap up this explainer. Is your bank approving loans based on AI slop? I mean, if $1 trillion banking sector can be completely outsmarted by a few lines of machine-generated text, it really forces you to critically reevaluate the very foundation of trust in our modern financial institutions. So as we close out, I want you to really ask yourself, how much of the economy around you right now is being propped up by systems that don't actually understand the truth?